Okay, well, good morning. I hope you're doing okay. Obviously, extremely difficult times for some. Thankfully, there's quite a lot of comedy about. I think the joke writers are as busy as the medics, to be honest. But we are here today to just update you on what's going on. So we're off. So this is our webinar, Practical Steps to Mitigate the Madness. Today is presented by myself, Andrew Ori, Ross Meadows.
Good morning and good afternoon.
Hugh Williams.
Morning.
And Gemma, I've never actually worked out a pronounce surname.
Lawani. Hi, everyone.
And Simon is supporting us as well.
Morning all, afternoon, anyone in the Southern Hemisphere?
Very good. So, sorry, I have to press that button. So we are Uri Clark. We are a multidiscipline professional firm, southeast of England. That basically means lawyers and accountants. We also have a medical GP, financial services people, recruitment, and various other things. Trying to provide some guidance to clients and their friends through this crisis. Some slides are much more detailed than others, and that's because personally, I hate it when someone sends you the slides and it's just single words on pieces of paper, so you can't really know what's going on. So hopefully some detail to help you through. Questions at the end, but ask them as you go through. We may have a few questions as we go. Please let us know anything you think we missed for next time. We will be doing this next week. We're hoping after next week we may be able to skip a week because a lot of the news has come out, but we will do this as long as it's needed. We're not going to go back on a lot of the stuff we did last week. You can watch it on the YouTube channel. Things have changed so much, as you know, anyway. Yes, it is being recorded. Yes, this will go on YouTube. Yes, we will share the slides. Yes, both webinars today, there's one later today at 4 o'clock, are live. Both have slightly different content in terms of the questions and answers. I hope that answers those questions. It feels like a month, I think you may all agree, but apparently it's a week, just over a week. So we are actually at the start of this thing, blimey, as they say. It's very intense, certainly for us. A lot of clarity needed, very high stress level for a lot of people losing their jobs right now. But things are at least taking shape, not yet for the self-employed. We'll have to wait for that later. And to be fair to the government, having had to reorganise our own firm in the matter of a couple of weeks between us, to reorganise in the country can't be easy. The grey hair in the building is reminding me that this is probably for a long time. People always sort of want it to be a quick bounce. There was some very positive news from Cambridge University, which has said, and it's slightly arguing with Imperial, that they believe the death rate's more like 1 in 1,000 from their study, and that maybe half the population of Britain have already had the virus, which would drastically change the mathematics and indeed the lockdown. Very strange. Some of us are working so hard, and some now will soon are not allowed to work. Companies obviously changing themselves very quickly. Anyway, hopefully some of these things we can help with, we hope. It's still about cash flow. It's all about liquidity. It's all about, can you get enough money together, cut your costs enough to survive. And if you can, then you're going to be in a great position to power out of it. So, Ross, what WTF?
What the furlough? Or what the furlough even? Yeah, I mean, in all honesty, I'd never even heard of the word until last Friday. I think just before we start and have a chat through of what we know so far, it's worth just quickly recapping on what we discussed last week. What you've got to consider is obviously all the ways of avoiding redundancy and retaining your workforce during this crisis, as well as what to consider when having to carry out compulsory redundancy. If you can refer to our webinar last week, there is a video of it. But this week we'll we'll look at this new concept of furloughing employees. And what I would say straight away, it is a way as an alternative to making your employees redundant. That's the key thing. But what does it mean? There's no real legal definition. What I did find out now that I'm a furlough anorak is that it was a term used by the British Army in the 19th century, where a soldier would be wounded, they'd have a period of recovery, and then they'd be granted furlough, which actually meant financial hardship, that they were commonly not paid. And last Friday, just before the announcement on furlough, I was actually speaking to a US client who said, why can't we just furlough the employees like in the US? And I sort of scratched my head a little bit and went, what do you mean? And in one state in the US, it allows you to immediately reduce the employee's salary by up to 50%. Anyway, enough of the history lesson. Who does it apply to? It applies to all employees, regardless of the sector. Who are on PAYE, obviously all employers. It's not currently for the self-employed. There's potentially separate protection for the self-employed. There's going to be an announcement today, and I'm sure we'll pick up on that next week. How does it work? It allows you as a UK employer to access financial support to continue paying part of an employee's salary. What I need to just stress here is that you do need to continue paying your employees. It may be that if you've agreed furlough, it's at a reduced rate. What this scheme is to allow you to seek reimbursement from the government. So, as I said, the key thing to consider here is always treat furlough as an alternative to a compulsory redundancy, because what furlough is that there's no work whatsoever. So what steps should you take? What you need to do is decide which employees to designate as furloughed employees. Now, this could be workers who cannot work from home. There's no work for them because they can't go and work into the office. Consider employees who might volunteer to be furloughed. They might have childcare arrangements that mean that they're not able to effectively carry out the work. Consider whether the employees you plan to furlough carry out unique roles, or whether they're actually carrying out the same roles as other employees. If there are a group of employees carrying out the same roles, you probably need to consider how you select them as you would in a redundancy process. You need to notify the employees of the intended change. So you're going to have to make that announcement to the affected staff. You need to consider consulting with the employees. Now, it could be also employee reps and trade unions if there's 20 or more employees at risk of being dismissed. But once you've designated those furloughed employees, you need to agree the changes with them in writings. Most employment contracts will not allow for this type of change to be permitted. So you need to obtain the express written consent. Yes, you could have militant employees who refuse to be furloughed. So if you don't get their consent, you'll probably end up with the same legal issues as we discussed last week, such as constructive unfair dismissal or unlawful deduction from wages claims, to name a few. What I would expect, though, is that a majority of the affected employees are likely to agree to be placed on furlough leave. Once you've got their agreement, make sure you confirm their new status in writing. It should include advising them on how long this is likely to last. I think that's hard to do in the current climate. So you may wish to put employees on furlough leave for initial period and then review. So the employee will need to confirm that they accept in writing. So by returning a letter or return email, give them a reasonable period to accept this change. In the current crisis, I'd say 1 to 3 days is reasonable, depending on how much financial hardship you're suffering. And once agreed, you can then look at submitting the information about the furloughed employees to HMRC. So when you submit that information, we're still, just to stress that we're still waiting for further details of the portal. It's not been set up yet. It's likely to take until the end of April. But what you're going to have to provide information about their earnings through the portal so that you can seek the reimbursement. That might take a bit of time. So I'm stressing again that there will be a period where you'll have to continue to pay the employees, whether on the furlough pay level or on full pay if you agree that.
Ross, I think they're talking about
reimbursement.
You won't see the cash until mid-May. They're talking about, so you got to.
No, but and the portal is unlikely to be set up until the end of April, they've said as well. But I think the cash could take longer.
Ross, there's actually been a couple of quite good questions asked earlier. One of the first questions is, does it include company directors who are paid through PAYE?
Yes, it's every employee who's subject to PAYE. I think the interesting, if you look at what guidance we have so far, if you own the business outright and you're subject to some PAYE, there may be a question of whether you should be entitled to it. But based on the guidance, if you're PAYE'd and there is no work, you should be able to claim the furlough.
I would say in that though, you've got to, for the entrepreneurs out there who've been asking me this, if you've got to not work. I mean, obviously it's going to be hard to police, but it would also be very hard to argue if you really are the main person behind your business that you stopped work. I think that would be tricky, Ross.
Yeah, I think that is the trickiness of, well, we can't just sit down and twiddle our thumbs if you're the owner of the business, and that's the key, that you must ensure that if you're claiming furlough, there is you're not carrying out any further work. So if we look on, if we move on to the next slide, I've just put together here some questions that I've received over the last week or so. Although it would have been the last week. It feels more than a week. So just going through these questions. How long will this furlough scheme last for? Well, currently what they say, it's going to be for 3 months from the 1st of March. So it'll last until the end of May, but I think it's highly likely that this will be extended. Will furloughed employees retain continuity of service and other benefits? Again, we're seeking further guidance on this, but because they've said it's going to be based on current employment law, I think it's likely that continuity of service and other benefits such as holiday will continue and be maintained. Do you have to continue to pay the furloughed employees? A lot of clients thought that they just could stop paying and then the government would pay the employees directly. So the short answer to this is, as an employee, you still need to pay, because what you're doing with furlough is seeking reimbursement for that pay. The question is whether you pay at the furlough level if you get the employees agreement, or whether you keep paying the employee on full pay, but whilst ensuring that they are currently furloughed, and then you just claim the furloughed part. What about employees who have already been given notice of redundancy or placed on unpaid leave before furlough leave was announced? Well, as you'll note, the scheme, which only came into force last Friday, has been backdated to the 1st of March. So I think it is possible for any employees who are still employed but were put on temporary layoff where you don't give them any pay or unpaid leave, or even under notice of redundancy. I think there's a possibility, because if they haven't been doing any work, for you to be able to backdate it to the 1st of March. I'd even say there's a possibility for people you've already dismissed. If you re-engage them, you would need their agreement, but that's a bit more challenging, I think. And then what if I provide my employees with some work whilst on furlough leave? Well, you can't do that. I don't know how the government are going to manage that, but they have said they'll put in measures to avoid any abuse of this. So on to the next questions. A key one that's come up a lot is, does training count as work? Now, currently there's no further guidance, but if the government follows what the guidance says in terms of following employment law principles, training does amount to working time for national minimum wage purposes. So our view is that it would count as work. So you can't train upskill employees. That doesn't really make sense to me. I think whilst there's a furlough period, it'd be great if you could. So hopefully the government will allow for this. But our view also is if they follow what happens when you retrain, when you're under notice of redundancy, you do get paid for that. So maybe that's not an option for anyone who's furloughed.
Keep in touch, actually, though. You said something interesting, which was that you can obviously keep in touch.
Yeah, I think so. I think if it's just a catch up, I mean, we've got to think about people's mental health here, that people are stuck at home. Some of them maybe in isolation. Some of them live on their own, and if they're not going out, I think it's good to keep in touch with your workforce. It's not that you're providing them with work, you're just seeing how they are, and if there's anything you can do. You know, they may be facing some financial hardship because of this, and you might be able to give them a bit of advice on what's out there from the government. Another question is, can my furlough employees work for other employers? This does seem possible, because what this scheme is about the work for the particular employer not being available. So there's no work for the particular employer. So I had a situation where a client of mine has employees on minimum wage, low pay, and they wanted to try and supplement what they'll get through furlough through this difficult period. And some of them said, can we become a delivery driver? And my view is, well, if they, every employee can, if allowed to, go and work for someone else. So I see that as an attractive option to make up the difference, potentially, if the employee wants to do that. You would need to check your employment contracts. They normally have wording that says you can't work for anyone else. It's whether you relieve employees of that obligation on a temporary basis. And the next question, which is a question for us all, is, well, what do they mean by 80% of wage costs, or up to a cap of 2,500 per month? What does it actually mean? We will touch on that later. Andy will run through an example, but if you read between the lines, wage costs is not salary, it's the total wage costs. Our view is that it will include such things as employer national insurance contributions and pension. So you've got to factor that in, that you don't say to the employees, we will pay you 80% of your salary, because that may not be the case. Are employers obliged to top up the remaining 20%? In short, no, there's no obligation to do that. You could agree to just, with the employee's agreement, you can agree to just furlough the employee at the furlough pay rate, but you may decide to try and help them out and top up. I think, Andy, you were talking about potential for loans to employees.
Yeah, I mean, there is you can loan an employee up to 10 grand and it not be considered a benefit. So in theory, if someone's suffering, for instance, you're only required to pay 80% up to the 2.5 grand. So someone on a higher salary, you could pay them the 80% and loan them some money. And then when things are better, start running a payroll and paying the tax to bring the loan down. That is possible. I mean, there's you can also pay some expenses from working from home, but they're pretty pitiful. But possibly a loan could be a useful technique.
Yeah, and the final question of the 10 that have come up quite commonly over the last week is, well, how do I calculate the 80% when people on a regular earnings. There's no guidance on this yet, but what I would suggest is you look at their average wage costs, say over the last 12 months. It could even be the last 13 weeks, because that used to be the way you calculate a week's pay for people on a regular pay. The other thing to consider is, as this applies to anyone on pay subject to PAYE, it can include workers, and there are 0 hours workers. Well, are you going to be able to furlough them? I think there might be a problem with that. We'll have to see what the government guidance says, but the problem is this, is that if they are 0 hours, the employer has the right not to give them any work for a period of time. So maybe 0 hours workers will suffer and not be able to get their furlough pay. So, you know, as this slide says, it is damn confusing. So I thought it'd be useful to just go through some scenarios and the considerations. I think the key thing is, again, I'll emphasize, is consider all alternatives to redundancy. Furlough is just one of them. The first step, when you're looking at options, whether to retain staff or do the compulsory redundancies, is look at the employee start dates, because it may be more straightforward to terminate or change employees' terms and conditions of employment when they've got less than 2 years. That the reason for this is they won't have unfair dismissal rights. So it's sometimes there's a bit more flexibility in those scenarios. Consider the employee notice period. I think this in a way touches on cash flow. The longer the notice period, obviously the more expensive it could be to terminate employment if you're looking to do so for redundancy. So the furloughing of an employee could help retain key staff and also save you immediate cost. And I think the same goes for salaries. You know, look at what employees are on in terms of salaries. What would be the cost if you had to make them redundant? What would be the cost if you just reduce the salary for a period compared to furloughing them if there is genuinely no work? I'd also look at your business as a whole and consider which employees. This is about designating people for furlough and also looking at the alternatives. Look at the ones who carry out the critical roles that you still need. Do you need to cut costs for them? For employees that there isn't really any work for, again, you go back to this selection. The ones that carry out unique roles, it's probably easier to agree furlough compared to the ones that are part of a group of employees, and you don't need all of them. Those are factors to consider, and that would affect the process that you follow. Then next, just back to that slide. As I've said, consider the alternatives to redundancy. What we would say is that furloughing may be the best option, particularly where you want to retain staff, and given what, in our opinion, is quite a generous offer. So let's have a look at a furlough example. So we've got company A. It employs 15 members of staff, 10 are sales staff, 5 carry out marketing, and there's 5 that do administration and support. And the company's considering, obviously, cost-cutting exercise, that there's no work. So they're considering temporary layoffs. They're considering whether to carry out redundancies. And furlough has come up as a viable alternative. What you've got to remember, and I'll stress this again, is that furlough will only apply where employees have no work. There's no work for them to do, so it can't be that they're doing some work. So in the first scenario, if all staff are at risk and you need to furlough them all, it's probably a more straightforward process. You're not having to select and consult with staff in the same way. It'll just be, you'll have to announce to staff and explain that they're all in the same boat and work out what you can do in terms of staff salaries. I mean, some clients of mine have said anybody who's on 20,000 or less, they will not reduce their salaries. You know, anyone above, they will have to, albeit they will not go below £20,000. You may want to look at things like that to help staff out. Scenario 2 as well is where there's no work for the admin support staff. Again, that will be fairly straightforward because they're in unique roles, and it'd be the same process as scenario 1. Moving on to scenario 3, this is a bit more complicated. So of the 10 sales staff, you actually, there's no work for 5 of them, so you need to reduce that head count by 50%. Marketing staff, you don't need 3 of the 5, and only 1 of the admin support staff is required. In this scenario, you really need to just think about options here. You might want to consider volunteers for furlough. Maybe some people in those groups would be happy to be furloughed for a period of time. Also consider any staff with less than 2 years continuous employment, because they haven't got the same rights as others with over 2 years, so it may be easier to enforce furlough on them. Maybe you consider swapping employees around. So say with the sales staff, you have on and off if it for a month, so that everyone has the same issues. Maybe you, as well as doing the furlough pay for staff, you do salary reductions for people who have to work and try and balance it out a little bit. Ultimately, you probably need to consider objective selection criteria as you would in a redundancy situation. So you need to consider the criteria to select people for furlough, and it could include things such as sickness records, disciplinary records, performance, maybe last in first out, maybe base it on last length of service in this type of scenario. And what happens if employees refuse? Well, ultimately you'll need to consider compulsory redundancies if there's no other options, such as wage cuts, and the redundancy cost that will arise from that. If employees agree, then great. Well, then you need to consider what this 80% 2,500 cap actually is, which Andy will talk about now.
Thanks, Ross. So what about the tax? So basically, it's not clear, but as Ross says, our view is that it's likely like this. So you've got an example on the left of a £30,000 salary, example on the left of a £50,000 salary. A £30,000 salary is the £2,500 a month. We believe in that scenario, if you paid them 80%, 2,336, you would get that amount back from the government. That's what we think is most likely. If you're paying them 50 grand at 80%, you're looking at 1,393. As we mentioned, possibly you could use the £10,000 loan to reduce your tax bills in the short term, whether that would have a huge impact. It might work like this. This is the other way from what we know that it could work. So actually in this scenario, they're only going to pay you 80% of the net pay and you'll be left with the shortfall. Currently as it stands, this is possible. But let's not to get lost on it. I mean, it's from salaries from the 1st of March to the 31st of May. You have to pay the money back. You have to get the money back from the government. You apply the end of April. You won't see the money till May, unfortunately. I don't know if Simon, if you want to ask any questions there, or we should just keep moving.
Yeah, there's lots of great questions, so thanks for everyone, but there's 2 that have stuck out for me. One is that on the government website, when it talks about furloughing, it refers to businesses, and the question that's been asked is, can employers who are not businesses do this too, e.g. if you're employing nannies or cleaners?
In short, yes, I've furloughed my nanny, unfortunately, this week. So it applies to all types of businesses, from sole traders to who employ staff and have them on PAYE.
Thanks for that, Ross. And another one, which is probably very topical for a lot of our clients. A lot of our clients have employees who are in the UK on sponsored work permits, and often those permits will have a restriction that there's no recourse to public funds. So the question is would this furlough be considered to be public funds? And if so, would that limit an employer's ability to place a sponsored worker on furlough?
I mean, that no recourse to public funds is personal to the visa migrant. So this reimbursement is for the employer, not for the visa not for the actual person who's on the visa, the employee. So it should be okay.
All right, we'll crack on and do some more questions at the end. Government grants, that's the best money you can get, if you can get it. Probably a lot of this. Okay, if you run a restaurant or something, then you should be being contacted, again, small businesses, but you've got to pay rates. You've got to have a property. I did see yesterday PRS announced for the musicians £1,000 that they would try and give to you, which is interesting to see some of the other trade bodies try and help out the huge majority of people who work from home or creatives and don't have a premises. But unfortunately, that's the reality. There is the VAT holiday, I'll explain in more detail later, and the sort of delays, holidays to paying other taxes. The VAT holiday is for any VAT liability between the 20th of March and the 30th of June. As you know, you file your VAT returns in arrears, effectively. So what you're talking about is any invoices raised between February and the end of April. You don't have to pay that money until the 31st of March 2021. So whether they'll extend this, I'm not sure. You need to look, if you've got a direct debit, you need to stop your direct debit. They're not going to do it for you, unfortunately. If you filed a return before that period, yes, you still are liable for the liability, although I don't imagine they'll chase you as hard as they normally do. This is a little bit technical, but think about your dates of invoices. So there's sort of 2 points here, really. Your first point is that, generally speaking, you've got 14 days to raise an invoice. So that means any work you've done in mid-February, not mid-February, in mid-January could be captured in the February returns if you follow what I'm saying. And furthermore, there's this concept of continuous supply. It won't apply to all of you, but if you've got continuous supply, you will note quite a technical point here that you actually have a right to only bill sort of annually, maximum of 12 months, but you can issue notes of payment and issue an invoice at the end. Have a look at that VAT notice or give me a shout if you want to try and understand what continuous supply is. But it's people who supply continuous services effectively, or something that you're doing work over a period and then it has an end point. So, Hugh, my friend, what the CBIL?
CBIL. I was asked that question yesterday. Part of the glossary of 2020, I think the year's going to have its own handbook, right? So CBILS are the Coronavirus Business Interruption Loan Scheme. It is debt, covering a bit more here, sort of recovering what we talked about last week. But we now have more detail on how this is going to operate. But we stress this is debt and you don't want to be tied up in knots. You are effectively going along and asking for a normal commercial loan. And if you go on to the next slide. There's 3 different loan types available. So they are providing term loans up to 6 years in length. There is overdraft and invoice financing facilities available. That's only up to 3 years. And I think it would be very particular to your business. Those kind of finances, those kind of facilities are going to be helpful through this period. Getting through on an overdraft or is probably going to be quite tricky. Hopefully the VAT deferment and the cash flow measures will help in terms of getting through that. Invoice financing, if you've not looked at it before, there's lots of strings attached, so we haven't really covered that in too much detail. Term loans are the ones that most people are looking at. It obviously gives you clarity, it gives you nice a sense of how long you're going to have this money for and clarity on when it's going to be paid back. An extension to the relief that was granted when we spoke last week. So the interest is going to be covered by the government for now 12 months. So it's 12 months interest-free loans. Banks have started coming out with more detail, and it's only been in the last couple of days. They are only really looking to lend to their own existing customers. It states everywhere, your own primary banking partner should be your first port of call. They're making it very clear they do expect you to have explored all options. These aren't just loans to carry on. These are loans to help you get through. So they're looking for you to have deferred your VAT, cancel those direct debits, looked at the position of staff, discussing whether you need payment holidays, reducing salaries, furloughing, as we've been hearing about today. Effectively, you are making a normal commercial loan application. So the bank is going to look at it in exactly those terms. It's only where there is something, a lack of security, some doubt in their mind that they wouldn't normally do that, grant you a loan in these conditions, that they would then effectively bring in that 80% government backing. They do, as I say, expect that this is for survival, not so that you can just carry on and everybody still earn exactly what they were earning and sort of just ignore what is going on. We raised it last week and we stress it again, do not panic buy on cash. This is, it is repayable. All of the guidance says 100% is repayable. The 80% backing is only where the government will step in case of default. The banks are also sort of sending out the message there, do not try and come along and get your £1 million loan through that you've been hoping for. You know, if you need 200,000 to get you through this period, that's what you should be claiming for. There's going to be a lot of applications out there. So, I mean, stress it here, don't get dismissed as a joker. Don't go along asking for £1 million if what you realistically need is 200,000, because you're going to be right back at the end of the queue again. Repayment has to be a viable option. I mean, we stress this, you know, it is a liability. So just make sure that you're going back to that first point. Cash is king. Look at your cash flow and make sure that this is sustainable for your business. It's definitely not a gift. So strong trading history. Unfortunately for many tech businesses, you know, they don't have that much income anyway, and they're burning through investors' cash. Typically, the bank is still going to be looking at you and saying, "Well, where's that? Where are the investors now?" You know, it's not really there to support those kind of businesses. Below 250,000, we understand that there's going to be a bit more sort of local flexibility on that. So more likely your bank manager will be able to kind of sign off something below that sort of level. That's what they're kind of indicating an SME may need to get by, but it is having taken all of those measures. And what different banks are taking slightly different approaches here. NatWest have indicated they won't be looking for personal guarantees typically for the 20%, but some security will need to be taken. So, you know, maybe they may change their tune if there's not anything they can particularly secure in the business. Barclays, on the other hand, seem very confident in stating online with their guidance that they are definitely after personal guarantees. So our point all along has been there is a liability there and somebody's responsible for it. The directors in this case are absolutely right on the ticket.
Yeah, pretty tough going, I have to say. Personal guarantees, even for £25,001 there. But yeah, Gemma, thank you, Hugh. Fantastic, Gemma. Over to you.
Yeah, so one of the other issues that many of you may be wondering about at the moment, given that most of us are now working from home, are your leases and the rent due under those leases. So one of the main questions that we've had from a number of our commercial tenants are whether they can bring their commercial leases to an end as a result of coronavirus. The quite simple answer is no, you can't. That lease will continue. You won't be able to claim force majeure because of coronavirus. Force majeure clauses are not included in commercial leases as standard. Hardly ever they're included. Maybe going forward they will be, but they're not at the moment. And so your obligations will continue. Most leases also won't include a rent suspension clause to cover circumstances such as this. If they do, well, they will contain a rent suspension clause, but that will only come into effect if a building is actually damaged by an insured risk, so like fire or storm. It won't include issues of not being able to use your office because of the coronavirus. So my first and foremost tip for both landlords and tenants is to open the dialogue now, if you haven't done it already, and discuss how you may be able to get through the next few months. So you may be able to negotiate with your landlord a rent concession. So that might be an outright rent reduction for the next few months, or possibly a suspension for now, followed by an increased rent later down the line once you're able to occupy your premises again. Or you might want to consider a payment plan. On that note, if you're currently paying your rent quarterly, as a lot of commercial tenants do, think about approaching your landlord to ask for paying rent monthly instead, just because it will help with your cash flow for now. If your landlord is holding a rent deposit on your behalf, that can often be 3 months, 6 months worth of rent. Ask your landlord to consider withdrawing from your rent deposit rather than asking you to pay the rent, which again will help with your cash flow. Another point for those of you who occupy co-working space, consider asking the co-working operator for effectively a pause in your membership, so that whilst you're not using the premises, you don't pay rent, but in return, I would recommend that you offer increasing your fixed term at the end of it, because they are likely to have issues with obtaining tenants to occupy co-working spaces, so they would probably be quite willing to agree to something like that. It's important to remember, if you do manage to negotiate any such terms with your landlord, ensure that it's put in writing, whether that be by way of a binding side letter or a deed of variation, whatever. It depends on which terms you're amending as to what you need. I can help with that. And always remember, any such amendments to your terms are entirely at the landlord's discretion. They're not under any obligations to actually agree to any such terms. But if landlords are not flexible at the moment, they probably risk losing good tenants entirely, and they'll then be faced with the challenge of finding someone else in the current market. So I think that landlords would be well advised to try to be flexible if they can be. At the moment, the coronavirus bill, which is being, it's likely to be passed either tomorrow or early next week. That includes provisions that will prevent landlords from evicting their commercial tenants due to non-payment of rent for the next 3 months. So that will definitely relieve immediate cash flow issues for tenants, but tenants, please note, you will still be liable for paying rent after this period, and so it is for landlords and tenants to negotiate to try to reach a solution on payment. With regards to for landlords, I'm sure that a lot of you are being approached at the moment by your tenants requesting rent concessions or some sort of amendments to the terms of your leases. Institutional landlords might be in a better position to be able to help their tenants and be a bit more flexible. For private commercial landlords, they're likely to have commercial mortgages themselves, and they will rely on their rental income to pay those mortgages. So I would recommend that if your tenants are approaching you, asking you for rent suspensions, landlords should approach their own banks and ask whether they might be able to have the benefit of a mortgage holiday. Those are not, the government hasn't announced that commercial mortgages can have holidays, so it's up to each bank to agree that with the landlords. Alternatives might be to reduce mortgage payments, or alternatively to move to interest-only payments instead of capital repayments for a few months. One other quick point to mention on leases is tenants. If any of you plan on exercising a break clause in your lease, if you want to terminate your lease that way, just note that most of them will have a condition requiring you to pay your rent, and that your rents have to be paid up to date in order to exercise that break clause. So if you do plan on exercising a break clause, just keep paying your rents, otherwise the break clause won't be valid. With regards to business rates, Andy did touch on this, so I'll only mention it briefly, but if you are in the hospitality, retail and leisure sectors, you're entitled to a 12-month business rates holiday. You're also entitled to a grant of £25,000 if you have a rateable value between £15,000 and £51,000. With regards to both of those, the local authority will be contacting you directly to arrange this. So you don't need to contact them to apply for it, they will contact you. If you have already paid your business rates in advance, you should contact your local authority to request a refund of those business rates if you're in those sectors. And as Andy mentioned with VAT, similarly, if you have direct debits set up to pay your business rates, just ensure that you do stop those if you're in the hospitality, retail and leisure sectors.
You need to make sure you're checking your posts too, I imagine.
Because a lot of people won't be going to their premises, so just make sure you do go.
Because otherwise,
at least once a week. Exactly, to check.
Yeah, well, you may not know if they've offered you offered you a grant. That's how they get hold of you.
Yeah. With regards to insurance, I'll just touch on this, but both landlords and tenants should check their business interruption insurance policies, if they do have them, to check whether losses due to COVID-19 are covered. Most insurers will have a list of specific notifiable diseases that are covered under this section. Obviously, COVID-19 won't be present because it wasn't known until recently. However, some policies are written on a non-specified basis, and under these forms of wording, you will be able to claim for loss of rental income, loss of income. So do just check those policies to see whether they are on a specified or a non-specified basis. Most landlords will have loss of rental income insurance included within their buildings insurance, but this won't help in these circumstances because, just as I was mentioning earlier, this only applies if your building is actually damaged by an insured risk and your tenant can't occupy it and therefore don't pay rent. In this case, since your buildings are not actually damaged by fire or storm or something, you won't be able to claim loss of rental income insurance.
Thanks, Gemma. So really we're on to the final bit and then questions now. Obviously a key question, how the hell do I raise money in this market? If you haven't just raised money, I mean, there's a lot of startups and things that have just raised money and then, they're in much the same position that they thought they were in, maybe a better one even, because they have an opportunity to evolve during this period. If you haven't raised money, the government's help is limited unless you are, you've been showing profits and you're a decent business. I don't think that's much of an option. You can't stop paying yourself probably, and probably you're on dividends, which, unless they release some new rules, it would be interesting what they say today about self-employed. Does dividend income count in self-employed? Certainly as a tax person, dividends are a separate thing. They're a return of capital. They're tax advantageous, but they are not employment income. And, they're not supposed to be that. So they could be harsh on that, based on the fact that they, want to draw that line, I guess. So what are the options? The only sensible option that we believe, and thanks for all the clients that have helped work on this, is ASAs, Advanced Subscription Agreements. You may know them as SAFEs, is the American term, Simple Agreement for Equity. Someone gives you money without, you can't do a valuation at the moment, obviously. So the whole thing is when you don't know your valuation, you raise the money now under an agreement which says, in the future, I will issue you equity when I do this raise of a certain size, or I raise a certain amount of money or a certain price, and you give them a discount in the future. Why ASAs are so attractive is that they are compliant with SEIS and EIS, that very generous tax relief for all UK investors, 30 to 50% of their money back on investment, no tax when they sell their investment, there's various other benefits to it as well. So very, very attractive to investors, and ASAs are compliant. The Revenue finally issued some guidance in January accepting the reality. Now, their guidance says if you wish to come, so you can go to the Revenue and ask for assurance that your company is EIS compliant. It's not required, it's just nice for investors. If you go and ask them for that, and you have an ASA of longer than 6 months, their policy is that they won't give you assurance. Now, we know on the grapevine from thanks to Jeremy, our tax guru, who's very plugged in, shall we say, that the leading experts in EIS are pushing HMRC hard. Our view is a 12-month long stop ASA agreement is perfectly legal at the moment, and they will probably give us assurance in the future because it is so realistic and reasonable in this market. So I would recommend an ASA agreement with a 12-month long stop date, and get out there and try and raise some money on it, on the basis that when things improve and the valuation becomes clear, you can get EIS relief and the world becomes a happier place. That is really the best option. The other option, R&D. So get your R&D income and do ASAs. That's really, if you're a startup who hasn't raised money, those are your two options on the table. You've got a very short window where you might get lucky, for the 5th of April. There may be someone who's happy to invest because they want the EIS relief in this tax year. But if not, R&D, ASAs. Yeah, sorry, this is what I was just saying earlier. So you can look this up if you want. This is the manual reference for their recognition, this principle of the 6-month long stop date. 5 other quick practical points and we're done. Make sure you've got your employer's liability and other insurance covering people working from home. A lot of people have forgotten to ring up and do that. They are now working from home. You have to insure them in case they trip up on their dog. Make sure you keep a record of the IT equipment that's leaving your office right now or last week. Make sure you've got a record of all of that. You can delay your accounts for up to 2 months at a company's house. You need to ask for it, but everyone can get it. May be helpful, slow things down a little bit, give you a bit more time to do your R&D, get your claims right, or put off paying accountants like us. Mental health will be a real battleground, of course, for the employers. There's all those tools and things out there. There's some recommended by the NHS. It's not for us to recommend, but I think obviously take that seriously. So do check your post if you have premises, because I think that is how you're going to see the information. I think the thing that really struck me over this is it's a time when you've got to get your profit versus purpose. It's important that all companies have a purpose that isn't just profit. And I think now more than ever, you have got to get that clear. If you are, if you need to define it better with things change it, with this world at siege, or, refine it really to really be clear, because it'll help you tread this very difficult line, because there's going to be a real mix of what's going on here. That's it. Good luck. Let's do some questions, I guess. Simon, do you want to take the lead on the questions?
Yeah. So just there's a whole number of questions, but I think what we'll do is there's some themes running through these. So the first couple are for Ross. There's a couple of questions that have been asked about what happens with accrual of annual leave while employees are on furlough.
Yeah, my view is that it will continue to accrue. So, because they say it's normal employment law principles. So I think, continuity of service benefits such as holiday will continue to accrue during this period.
Okay. Another question is, we only have one employee in the UK. Can we furlough that employee?
If there's no work, yes, and they're on the PAYE, yeah.
Okay. Just moving through these. Can employees on sick leave and maternity leave be furloughed?
That's a good question. There isn't really any guidance on the maternity leave, but if I know with sick leave, that if you're sick, you've got to be subject to SSP. You wouldn't be on furlough. You know, you'd be sick, particularly if it's before you furlough them. So that there might be a few employees who suddenly say, "Actually, I'm well enough again. Are you going to furlough me?"
Yep. Next question is, how does an employer inform HMRC about furlough workers? What is the channel? Do we have to wait until the portal is live?
We're going to have to wait till the portal is live. I think just key things that they'll probably ask for, as well as your I guess your real-time information of what you've paid them. They want to know that they are actually employees. So thinking about the sort of the directors of businesses who are also on PAYE, you should really, they want evidence of an employment contract. And they'll want evidence that there's been an agreement to furlough as well. That there's been an agreement between the employer and employee that from this date you're furloughed, and this is the conditions during this period.
Okay, I'm just now going down to a couple for Gemma. If our workspace, co-working space provides other services outside of the office, such as mail collection events, access to other buildings, internet, etc., which they are not providing at this time, would we be entitled to a rent reduction?
It depends on how the agreement is worded. So if it's an all-inclusive rent that includes, which often is the case with co-working, includes rent, service charge, business rates, you're not automatically entitled to any kind of a rent reduction. So you would need to contact the co-working operator to see whether they would reduce it to take into account those factors. But if you do have sort of a traditional lease where rent and service charge are separated out, since the landlord's not going to be providing those services, they shouldn't be charging you a service charge. Or at most, a minimal service charge.
Thank you. Thanks very much, Gemma. Next one, are we entitled to the 10K grant if we have an office in a shared workspace? I believe we do pay rates, but the workspace sorts all of that out for us.
So your business rates are probably included within your rent. The operator, is it a co-working space? In this case, yeah, the co-working operator will pay business rates for the entire building, and it will undoubtedly have a rateable value over £51,000, and so no one will be entitled to the grant.
Similar question. We have a license, but not a license to occupy, but not a rental agreement. As such, we don't directly pay the business rates. The operator of the building does, but we're in the hospitality sector. Would we be eligible for the grant?
I don't think so. I think it will come down to who is paying the actual business rates and whether or not they are within the hospitality sector. I don't think so. I'm not sure on that, but I don't think so.
I just had something come in by text. Hello, Chris. Chris, who is a smart cookie, is doing, if anyone wants a cold read, basically, of their, for any startup that needs to raise with an ASA, he's happy to do an unboxing video for someone's pitch deck, saying out loud everything an investor would think, but never tell you about your deck. That's very kind. That's Chris Howard at The Rattle. Thank you.
Okay, just and then just one very last question. Any advice on board meeting obligations? I guess I can probably take that one, is that board, you don't need to meet in person to hold a board meeting, and certainly at these times I would encourage everyone to be having regular board meetings and certainly maintaining regular contact with other board members. And even if you're having informal calls just to discuss matters in relation to COVID-19, you should make sure that you keep a record of those calls and the decisions. I mean, if you're making decisions, then you should make them formal minutes. But certainly, all directors of all limited companies should be talking to one another on a very regular basis. And yeah, I think we're pretty much only a minute away. I think given that there are so many questions here, it's probably worth us taking these and just developing a Q&A out of them and then circulating them to everyone.
Yeah, I think probably one of the best questions on the furlough is sort of, can it be turned on and off? That is the one thing at the moment that I don't think we think can't be done. So in theory, you could furlough someone for a couple of weeks and then bring them back on and back and forward. I think that's right, isn't it, Ross? As a sort of the closest you can get to doing 50% as opposed to no work at all or something.
Yeah, I think it's a possibility. I think the problem you have is if you're doing it a week on, week off, it's going to look very messy, and I think you might be waiting a longer period for reimbursement. I think HMRC would question that compared to you have a month or so on furlough, then things pick up a little bit, and then you have to furlough again if obviously furlough is still in place. So I think you've got to be careful and consider how you approach that.
And someone's asked, how do you check your post when you're in lockdown? Well, they've reduced all the congestion charges and everything, and my sister's driving in daily to get our post, and seems to be having quite a fun time, other than there's nowhere to buy any food that much, or, well, supermarkets aside. So you definitely can get into your office, but obviously it's all, our office is not a co-working space, which might be a bit trickier, but let's hope you can.
On that point, though, you could also apply to have your post redirected. So you do need to go to the post office to do that, but they are open for the moment. So you could consider doing that.
Thanks for all your questions. There's lots of questions here on similar themes. I hope we answered some of them. Do hit us up. If not, that's what we're here for. Thank you to everyone. Thank you, Ross.
Thank you, everyone.
Thank you, Hugh.
Thanks. Take care.
Thank you, Gemma.
Thank you.
And Simon, thank you.
Thank you. Thank you, Andy.
Do take care, everyone. Catch you next week, I guess, if not before.